Hey everyone, and welcome back to the channel. Today, we're diving into a major financial shift that's making waves across the globe. Russia just did something unprecedented for a major sanctioned economy. It issued its first ever sovereign bond denominated in Chinese yuan. This isn't just some small financial experiment. It's a move with massive geopolitical and economic implications. Let us break down why this is such a red flag for the United States and the global financial system as we know it. So, what exactly happened? Moscow announced it's issuing 20 billion yuan worth of bonds. That's a significant amount, signaling this is a serious, long-term strategy. The primary motivation for Russia is clear: to break free from the grip of the Western financial system. By using the yuan, Russia can reduce its exposure to potential asset freezes and bypass the dollar-dominated payment systems that have been used to enforce sanctions. This isn't a new idea for them. It's the culmination of a multi-year effort to diversify away from the US dollar and the euro. Now, let's look at this from China's perspective. For Beijing, this is a huge win. Having a major economy like Russia issue debt in yuan adds prestige and boosts global confidence in Chinese financial instruments. It proves that China's onshore bond market is deep and liquid enough to handle this kind of major sovereign issuance. A successful bond sale would demonstrate to investors worldwide that holding significant sovereign debt in yuan is not only possible, but also viable. This move is as much about geopolitics as it is about finance. It is a powerful signal from both Moscow and Beijing that strong economic ties can create an alternative to Western financial dominance. Think of it as building a parallel system. For Russia, funding its debt in yuan also makes practical sense. It smooths out payment issues with its biggest trading partner, China, and reduces foreign exchange risk because its debt currency now matches its income currency from trade. China, in turn, expands its strategic influence. The yuan becomes the go-to currency for invoicing and funding for a major global energy exporter. This directly challenges the petrodollar system, where oil and gas have traditionally been priced in US dollars. If Russia starts invoicing its energy exports in yuan, it marks a significant erosion of the dollar's dominance in the global energy market. There's also the question of who's buying these bonds. It's widely expected that Chinese policy banks or state-linked institutions will be major buyers, effectively underwriting the issuance. If Chinese banks guarantee or heavily invest in these bonds, it pulls Russia even deeper into Beijing's financial orbit. This creates a feedback loop. An active yuan-denominated market for Russian debt could encourage more energy contracts to be priced and settled in yuan, further diminishing the role of the petro. Over time, repeated issuances like this could normalize holding yuan among central bank reserve managers around the world. Central banks in Asia, Africa, and Latin America might see this as a precedent to increase their own allocations to the yuan. This fundamentally challenges the long-held belief that the US dollar is the only liquid, safe currency for large economies to raise funds in. This brings us to the effectiveness of sanctions. Western sanctions largely depend on the central role of the US dollar in global finance. Every time a country finds a viable way to operate outside the dollar system, that leverage weakens. This Russian bond is a real-world test case. The world is watching to see what the demand is like, how it trades in the secondary market, and who the actual buyers are. If demand is strong, it could accelerate the adoption of the yuan internationally. If it's weak, it will expose the current limits of the yuan's global appeal. The success of this single issuance could create a domino effect. Other sanctioned countries, or nations politically aligned with China and Russia, might see this as a template to follow. Emerging markets that have struggled to access Western capital could be next in line to seek yuan-denominated financing. If a group of countries starts issuing bonds in yuan, it could lead to the creation of new regional bond benchmarks, completely independent of the dollar. This all aligns perfectly with China's long-term policy goals. Beijing has been working for years to promote the international use of the yuan in trade, investment, and finance. They've been implementing domestic reforms, like opening up their markets and improving custody arrangements, specifically to attract foreign issuers. China is clearly willing to take on political and economic risks to establish the yuan as a currency for strategic partnerships. What we're witnessing is the potential fragmentation of the global financial system. We could see the rise of parallel systems for payments, securities settlement, and custody of assets, one aligned with the West and another centered around China. The trend of de-dollarization is often slow and incremental, but this bond issuance is a very visible and concrete step in that direction. It offers a tangible alternative that could reduce the power of US-led financial sanctions. So, how might the US respond? Washington could ramp up pressure through secondary sanctions, targeting international institutions that deal with these Russian bonds. However, such a move is risky. It could cause significant collateral damage to global banks and markets that operate in both systems, potentially accelerating the very fragmentation the US wants to avoid. This new reality will force markets to reevaluate political risk. A country's credit rating might start to depend on which camp it belongs to. Investors might demand higher returns on dollar-denominated bonds from countries seen as moving away from the West. Conversely, yuan-denominated instruments could trade differently depending on the perceived level of backing from Beijing. Central bank reserve managers will also need to rethink their strategies. It's not about replacing the dollar entirely overnight, but about diversifying their holdings to manage these new geopolitical risks. We could see central banks in regions with close ties to China accelerating the use of yuan swap lines and bilateral settlement mechanisms. As funding trends shift, so will trade invoicing. More businesses will likely choose to settle transactions in yuan to avoid currency mismatches. This shift isn't just limited to governments. The corporate world is watching very closely. Multinational corporations might find it cheaper or strategically advantageous to issue their own debt in yuan. And here, a potential if yuan-denominated sovereign bonds eventually get included in major global bond indices, it would force passive investment funds and ETFs to buy them. That would trigger a massive, automatic flow of capital into these instruments. Of course, for this to happen on a large scale, the technical infrastructure needs to keep up. Things like foreign custody access and liquid repo markets in yuan are crucial for attracting and retaining international investors. The speed at which this parallel system can grow will depend on policy coordination between Beijing and Moscow on everything from settlement to clearing. The role of offshore yuan centers like Hong Kong and Singapore will also be critical as gateways for global capital. From Russia's perspective, issuing debt in yuan also helps its domestic finances. It reduces their reliance on their own scarce foreign currency reserves. And if China-backed buyers are willing to accept lower yields for strategic reasons, this new funding source could be quite attractive for Moscow. In the long run, this deepens the financial interdependence between Russia and China, creating a relationship of mutual vulnerability. This could be a stabilizing force, driven by mutual economic benefits, or it could become a source of leverage, increasing Russia's political dependency on China. Market observers will be closely tracking the post-issuance metrics. Bid-ask spreads, trading volumes, and most importantly, who ends up holding these bonds. If Western institutions find a way to participate, it would signal a partial normalization despite sanctions, a very powerful message. But if the buyers are exclusively Chinese or linked institutions, it suggests this is a more limited, politically driven market. Ultimately, the immediate economic value of this single bond issuance might be less important than its psychological and symbolic impact. It demonstrates that a credible pathway exists for major economies to finance themselves outside the dollar system. Whether this becomes a true tipping point or just a minor footnote in financial history depends on what happens next. The demand, the political reactions, and whether this becomes a one-off event or the first of many. Thanks for watching. This is a complex and evolving story. So if you found this breakdown helpful, be sure to like, subscribe, and hit that notification bell so you don't miss our future updates. Let me know your thoughts in the comments below. See you in the next video.